all I'm going to say is go back to the video I posted. Now, I'll give you a quick update, a quick recap. So here we are, gold 1 hour chart, right? Now, we did short all the way. The box that I left here, if you check basically the previous video, you notice that we hadn't reached this price here. I am interested in longs around this zone. Anywhere around here, I'm interested in longs. Very interested. But let's actually look at something. Let's take our fibs from this low here to this high. What did it do? 61.8. Bang. Now I'm going to show you how you get in. Right? This is exactly how you get in. This is gold I'm showing you guys. Like, this is definitely part of my entry model. Yeah. Now, this is the 1 hour. Once we get a tap into this price, if you are interested in this price, your alarm must go off. Right? It needs to go off. If you're interested in this price, your alarm must go off. Now, have a look here. Your alarm goes off here. Right? You don't just go in blindly. You can do. You could definitely go in blindly, but for amateurs, you don't just go in blindly. Maybe for someone like myself, I could go in blindly and say, listen, I'm confident with this 120 pips, and I'll take it to this trend line. And this is why trend line is so important. I would have made the 4-to-1. Look at that, 500 pips. But for you lot, you need to go down to the 5 minutes time frame. I'm sorry. And this is what I do as well. So there's no shame in it. Or the 15 minutes time frame you could do as well. Let's look at the 15 minutes time frame. Yeah, perfect. This is, look at it right here. It comes down here. Your alarm clock goes off here. Bing, bing, bing. It goes up. Now, a lot of people would try to get off this imbalance. Yeah, they'll go down to the this is what will happen. They would go on the 3 minutes and then try to take longs here and put their stops here. The market knows where the liquidity is. It's going to spike you out. Look. It's going to spike you out. Your stops will be here, right? You try to take the trade from here, right? And this is what you'll do. This is exactly what you'll do. You do nothing. No, I'm joking. This is exactly what you do. And you do whatever you're aiming for. Yeah, 100 pips. You're taken out. It's spiked you. So sometimes you need to just simmer and wait. You know what I mean? So, boom. This is how you do it. You wait. Because you know sometimes what's going to happen is the first time, when it goes up and it comes back down, it will like to spike people out. But look what it does. Once it actually goes above these wicks and doesn't respect these wicks, it respected it there. Yeah, look at that. It respected it there. And it went up there and it reacted. A lot of people would have gone short, you know. I would have gone short in a different time frame, but because we're going downwards, I'm not trying to add it to the pressure. You know, a lot of people be like, what are you talking about? You need to follow the trend. Sometimes when you're experienced, you know when there's a turnaround. You kind of have an idea. For me, the turnaround's in this box here, or once it comes back down to this trend line. But anyways, back to this model. This model is perfect. Right. We come down to back to this area where your alarm is going off. The price goes up. What does it do? It leaves a free candle imbalance. Look at that. I'm giving you gold. You know me, I do wick trading a lot of the time. I don't really do fair value gaps. But look at that. It comes back down to this price. This is the price now. This is the new price. This zone here. Yeah? It comes there. It fills this imbalance here. So it goes up. It comes back down. And then it allows you to get off here. So what you would have done is you would have your stop loss would have been around here. Let's just say there's possibilities it could have wicked this out and then gone up. That's very possible, but it's already taken liquidity for me. So there's your 100 pips under this red bar here, and then you target up there 5-1. Look at that. It's that simple. It's not hard. It's a probable game. Now what I'm going to do now, I'm going to show you something live, what I'm going to be looking at. Now let's go to the 1 hour. Is there anything that I can see? Okay, perfect. Look, let's look at this box. It's not going to be as clean, I'll be honest with you. It's definitely not going to be as clean. But let's see what we can do here. Let's see if we could take shorts, or we're going to break out. We could break out, but let's just look for shorts. Let's say we're bearish. This is how we will tackle it. Now it's reacted off this. It's come back down. Is there any way we can take shorts here? Yes, there is. Sometimes you don't need that model, although that's the best bet. But for myself, I could potentially go in here. It depends how I feel and what I'm looking out for. I'm not going to reveal everything, but I could easily take a short position right now. My stops is 50 pips. It's worth it. Now I'm looking at a situation back down to even where I'm initially interested in, and I got 14-1. Look at that. Order filled. Look at that. I could do that. I could risk that 50 pips. You guys could do it as well. 50 pips, what's that? Let's say you did risk it. Let's say you waited until it spiked. Let's say you said to yourself, you know what? I do believe there's going to be a lot of spiking because there's a lot of liquidity up here, yeah? So I'm not going to play the fool's game. I'm giving you too much. Way too much now. And you said I'm gonna put my stops above here. But you're going to wait for it to spike. Yeah? You can play this game as well, by the way. Look at that. That's 800 points. Cool, you don't want 800 points. There you are. You know what I'm trying to say? So, that's it. That is the entry model. You know what I mean? If you got deeper pockets, you could go there. You know, someone like myself, I'm more than happy to do that. 4-1, it still gives me. I bang it right there. So, that's it. So, this is a video about entry models and fair value gap. Before I let you go, there's times where you'd see, you can see the screenshot above. There's times where you could see a red candlestick on a downwards trend and it's false. It's just a setup. It doesn't always work. That's why it's very good to see that candlestick, what it's reacting off. Is it reacting off a fibs retracement? Is it reacting off some sort of like